My name is Dontez Lindsay. I am the general manager of Dux Trading LLC, as well as the lead trainer of StockCraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. With that out of the way, let's get into the content. There we go. Actually, I just put it in the speaker. I'll be fine. What do I want? Good morning, guys. How you doing? There we go. I was like, I can't hear myself. All right, now let's take that off. Hope everybody had a good weekend. Just reminded me, I got to wish my little sister happy birthday before she beats me up. Let me do that real quick. But hope everybody had a good weekend, and you made some money last week. If not, at least tested some of your strategies. There was a lot of activity the past 2 weeks. Just to throw it out there, I don't see anything today for now, but there's going to be some type of continuation from last week. Hopefully, we had a lot of activity, and usually after that, there's a little dead spot that comes after all kinds of activity like that. But we really want that to continue into this week. In the last 2 weeks, I only touched one thing, and that was PTPI. I cut it really close, like only losing about like 1%. I borrowed twice, and I borrowed twice in the whole 2 weeks. I thought I had a problem with my broker when it came to, like, I couldn't use my margin on anything, but I think all the stocks that came up recently, they were all micro floats and low floats, and they were connected to like certain hypes in the market, and the broker just was not having it. They didn't want anybody having margin. It wasn't just my specific account, or because you didn't sign a contract, but I did have to redo my contract about like liquidation and stuff. But it turns out like other people had to do the same thing. So if you were having similar problems, call your broker. They'll let you know, because a lot of the stocks that came up, not only were they really illiquid, some of them, they fell inside of the IPO rules, which is pretty much saying within the first 30 days, 90 days, there's all kinds of rules that says you can't use margin. Like new issues are non-marginable. New issues are not marginable for at least 30 days following the listing of its pricing. There's all kinds of like little nitpicky rules in there. And the quickest way to get through this all is just to ask your broker and if they have one of those chat boxes. How do I do this? They have one of those chat boxes. You can come down here and start a chat and just ask them about it. But other than that, yeah, last week I didn't do much. Didn't make a single trade. Had 2 borrows, and then since I didn't use margin, only got half of the cash like back after getting the borrows only for cash, because one of my problems the week before was I'd be really upset that I'd borrow times 2 worth of margin and then not even use it by the end of the day because my target wouldn't get hit. So I just borrowed a little less, and I was gonna take the slightly larger borrow later if I thought I needed to, but normally I would try to get that in the beginning. But oh well. The main thing is I have a plan now, and we should see some activity this week. And the stuff with the borrows, I heard from someone that called to the broker that was actually an error, like when it came to like the really crazy ones, and it had to be manually fixed when their pricing system kind of bugged a little bit, and they'll just be like, okay, we want to charge you $1 or $2 per share, when 5 minutes later it goes to like 10 cents, and then everyone that just bought that $1 is ready to gun down, or like is ready to like flip stuff. Well, that turned out those kind of borrows were errors, because when you deal with micro floats and small caps, people think that, hey, that is probably how popular and how low supply this stock actually is. So it kind of seemed a little reasonable. And yeah, they had a lot of calls coming in when people were just like, these borrows are ridiculous. And yeah, those actually turned out to be like errors going through the system, because like there's all kinds of reasons what it could be, like volume, the liquidity, certain like SSR and other things. But the main thing is we press the accept button at the end of the day. So it's our fault to filter that, or it's our responsibility to filter that. And there was times where there would be a good trade, or at least a decent trade, that I'm supposed to take a position in, and whether it's cash or margin, but most of my plans are built on me using my full account or using the margin in my account. And so when I would have a really expensive borrow, or I felt I took a loss already, like the state, like a freshness that I come to the market with, that I use to trade, like it's already tainted. And then at the root of it, it'd be the broker. Now there's always going to be similar situations where you get into that, or just like, okay, this thing just killed my mood, or just set the tone for the week or the day, and etc. The main thing is there was too many illiquid plays for us to be just trading everything at once. Max, last week I would have traded like 3 things, and I'll go over that after I send this message. I hear you. Quite annoying. I'm working on that too. Sweet. Yeah. The borrow freeze was like everybody was triggered. Okay, there we go. Now, I could just did that on Facebook, but what am I doing? The main thing is there is a lot of low floats and micro floats that have come up in the past 2 weeks. Back in 2021, that's all we saw, especially towards the end. Now, I'm confident I can make money in these kind of situations because most of the time it's just you just buy when the trend is there, and everyone expects anything that fits the theme of the week or the month, that's low price, or something that's going to go to 100. You just put in like cash and then it just goes crazy. But the short side of it is everyone is out to get you. Like the first 5 minutes and the first 5 minutes and the leading into the close, it's all the high frequency traders, the institutional traders, and they're setting the tone for the rest of the day. That's where they're setting the bull traps and the long traps, and you're just looking for evidence of if that trap is going to continue. Well, last week we got to see at least 6 traps. Like I'm talking about, like it was crazy last week. So like when I think of a trap, I think of something like this. This is on Google, by the way. You know, there's supposed to be a double bottom. This is something that happens like right in the morning. This is after the first 5 minutes where no one knows what's really going to happen, but it's really, really pretty when you see a lot of people getting chopped both ways. But after like 15 minutes, usually the direction's kind of set. You already saw the big pull or the big squeeze and stuff. And then like, that's what this first candle is. After that, you get to see, okay, how is it going to react? And on that second move, that's where you're just like, okay, this is where shorts are about to start chasing, or this is where the longs are about to try to make this thing go to 100, or at least start that first step in that direction. Well, we saw a lot of this one where it's like a double bottom and then it's like a fake breakdown, and at the end of the day these would stack up and then you would see a whipsaw. And if you didn't see a whipsaw, you actually saw these double bottoms just snap a lot faster than they should have, which is also just as bad because now all the rewards gone, and then it ends up like making a lot of people panic when it has a lower, what do you call it? A lower reward. But last week it was just real fun. Actually, I still have some of those tickers up, but we'll slowly go over that. The main thing is this week for now, I really don't want to trade those tickers under $3. My only criteria I'd look for, if it is under $3, it has to have a resistance that's, you know, pretty heavy. Like I'm thinking 30 million plus. Normally I'd say like 40 million. But yeah, at least 30 million plus. Now, let me see if I created reports from last week. Okay, here's one. Everybody remembers WINT. Now with this one, it was it went up to 19 from $4. So we had something to play with. Like, that's all last week was. You had something to play with, but it was also a test of like your discipline. Did you overborrow? Did you go in when any of this went up? And then there was always a second day that you could play off of. Like, you could play off of the second day's price action because you knew the day before had layers of resistance that were already supported by a resistance within the year. It was kind of crazy, but the main thing is it was something to play with, and it was reasonable. You could rationalize, justify any kind of action. I chose to stay disciplined for a large part of it, but one of the ones I did want to trade was WINT. Now, I wanted to touch this on the 17th, which was Monday. On that Monday, which was the start of the week, there was another ticker up there. It was called EVTEC, EV Tech. So it was the start of the EV theme. With the EV theme, you had BLBX. BLBX, it had a merger. It had a merger with a small EV luxury car supplier called EV Tech, and BLBX, its main ticker, now the combined asset, is called Black Box Stocks. And so the main thing is everyone is really sensitive when it comes to battery swapping and EV infrastructure right now. Everyone's looking for that black swan investment, meaning that they want a investment inside of the energy stocks that are going to pretty much flip like 1,000% before the switch to all green energy stocks and green laws, because of how it's being tested in California and already implemented in other foreign countries. There's a slow movement in the background of everyone trying to find investments in electricity and all the green laws, because they think it's inevitable that it's going to switch. Now that we're coming up on those OPEC, the OPEC cuts that start in May and continue all the way up to the end of the year, it was putting pressure on those same investors to speed up their investments. And so what they chased was BLBX and another one, but this one was like later in the week. That was UTCAR. Now UTCAR, remember I mentioned like battery swapping. With battery swapping, the main problem behind this is there is a very high cost for people to swap out their batteries. So everyone knows there's some like monopoly in EVs from like Tesla. And the only thing wrong with Tesla right now is Elon Musk. Like, his reputation, it keeps going through the mud. And there's all kinds of articles on like why. But the main thing is Tesla would be a great product if it wasn't for a lot of the scandals involved with Elon Musk. But the product itself is like, pretty good, and it speaks for itself. And Elon also comes out on a regular basis saying that there's a lot of room for improvement. Go back to the first principles. You can find and make a better product. And everyone's out there looking for that smaller company that they expect to be a black swan investment that goes from like $1 million market cap to like $1 billion, or they're even talking about like a $10 trillion market cap when it comes to what is it? EV taxis, EV and AI taxis. It's crazy, but everyone's looking for those kind of black swan investments right now, from AI, from EV, and it's not just trading. Like that's what the main theme is right now. Or at least that's what it started last week and a little bit of the week before. I even had an uncle call me up saying something really similar. He's like, I got a deal for you. And I'm like, what? Okay. But this is the similar stuff they were talking about. The main thing is we should see anything in the headlines that has something to do with EV or batteries just pop off. And that's the core reason behind it. They're all looking for that Hail Mary investment. Now, other than that, the AI stocks, Elon Musk, even though he bashed it a lot, he came out and said he's going to do his own project. And that kind of, just fueled the rally even more. But we all know at the end of the day, behind the AI stocks is just those what if then, what do you call those? They're pretty much the if statements. And if you know any like coding or just like basic coding, it's just like yes or no's kind of statements. What do you call those? Yeah. But the main thing is, there's another one. We ended the week off with UCAR. Now UCAR, that one was it was a pump and dump, and you know how this goes. Hello. But it was related to China. It was related to EV. And then since it was very focused on just battery swapping technology, when people hear technology nowadays, they automatically put AI in front of it because they believe all the infrastructure in technology in most industries right now, it just would do well by putting AI in front of it. And, at the back of that, there's always like Google, Microsoft, and NVIDIA, and all the like top tech companies and leaders. They just been pushing to put it everywhere, like even in normal stuff that's not AI, like AI pizza and AI therapy was the most ridiculous ones I've seen. But we know what it actually is. It's just basic coding. Yeah. But main thing is, with the UCAR at the end of the week, it kind of led us into the next theme, which goes back to the beginning of 2022, where we first started cutting oil from the reserve. And, everybody was really sensitive about the gas prices and switching over the green energy laws and stuff like that. During that time, you saw a lot of energy stocks pop up, but you also saw Chinese IPOs. Now, you probably remember HKD, and there were a few other like Chinese IPOs, but during this time you only saw them pop up like a day or two, and then they would go all the way below. I was about to say baseline, but they went all the way below the previous close. Well, we had the same thing with UCAR yesterday. This one, not yesterday. It was either Friday or Thursday. But the main thing is, it had gone up to 75 all the way from about 8. And then when it went up to 75, still intraday, it closed at 40. And people were expecting that, okay, this is going to go to 100 because it's related to China, it's related to EV, and it has the technology everyone's trying to capitalize on right now, which is battery swapping. And it didn't push very much. This is already after a week of like very high amounts of activity. And so usually this comes in waves. It doesn't just like stay at a certain level, besides like, pretty much 2021. Like it still had to have some type of like drawdown in terms of activity. And we really did pretty much go back to 2021 kind of hot market for a while. Everyone believed everything was the next meme stock. Now, not HKD level, but at least back to the energy stock era, where we first started those initial cuts, where you had HUSA and all the like 6-7 sympathy plays go over like 2 weeks. So that's why I think there's going to be some type of continuation or like a retest of what happened in the past like 2-3 weeks. Other than that, yeah, this UCAR, it died within 2 days. Like everything just dropped a lot faster than you thought it would. I wanted this to go to 50 before I felt comfortable trading it. Minimum was 40, like the mid 40s. It went to 35 and went all the way down. Now, one of the things is this could show just how active people are right now and how aggressive they are, because everyone knew, just because this was related to China, it's a Chinese pump and dump, because it's like a self-fulfilling prophecy at this point. It was just, they killed it. That's exactly what they did. They killed it. And you know, a lot of people were probably wondering, like, how could you not make money on this? You just had to start the short. Well, at the end of the day, the risk would have still been you know, this going all the way back up to 75. If enough people got trapped, this could easily like turn back around, is like what most people would think when they look at their strategy. Now, you said IMAB is slowly grinding. Yeah, it does that. I think I could pull up a few charts that show the end game of when this happens in the pre-market. But the main thing is it does have volume. It's at 2. It's already up 100%. Usually if a stock starts at $1 for me, minimum I want it to go up to is 3. Actually it's 250, but yeah, it starts in that direction. What was it? 2? It used to have a chart. Like if you start at 2, I'll touch you at 350. I'm trying to remember the concept behind that though. But first, let's figure out why you said this was shortable. Oh, 73 million. Yeah, but it has a day where it went up on like barely any volume. Let's see if there's a day where there's a consolidation. February 23rd. Today it's almost May. Okay, so that doesn't seem right. If there's a difference between what I have on StockCraft and what's on TZ, that usually means there was a split or something. Okay, so this one has a high of 32 or 3.28. Over here, my high is like 170 or something. Crazy. Yeah, but the main thing is this thing is really cheap. And if they did do some type of filing that changed the supply, risk management is going to be hard on that. Oh, not on the fact it's also biotech. The only thing I saw kind of tradable potentially, like it really could go either way, would be like ZVSA, and that's like a 10 million resistance, but again, it's biotech, and the consolidation intraday looks weird on that too, and it's also like 10 million resistant. The rest of it, it's like not even the right market cap or too cheap. But back to INAB, did this have a split? Like I look up to February. No, I don't see one. Yeah, but at least this one has a. See, I like the float on this. Like it's way far away from the stuff we've been normally trading, which everyone's probably addicted, because that's usually what happens when you get to those under 5 million floats. People are like addicted to that volatility that brings, and activity that like draws in more people to play it, like to change hands. But when you get back to the 20s, that's where you stop seeing pushes of like 50% and you start seeing closer to like 20%. And then when you do see like ranges in the pre-market of like 50 to 100, you see very shallow pushes now. It's much easier to trap back holders versus other stuff. Each price level, it's much harder to fill. Because like that's what the float is. You can pretty much say this is the max amount of people that can be trapped at this single price level. What was it doing? What's the catalyst for this? Okay, so they got an update on their new trial. So it's biotech, so we know they have a product and they're doing trials, and they just got an update. Now, a lot of these positive updates, they can get pretty popular like really fast. And it's already up 100% in the pre-market with 9 million volume, and we still got about 10 minutes before the market opens. So the chances of this becoming crowded, like more crowded than it already is not very likely. And when it comes to like resistance, like if we're using the 70 million, which is probably, you know, very reasonable compared to mine on the daily chart, which is probably why I was messing up. Hold on. Yeah, mine only says 2 million, which is kind of crazy. Hold on, let me get a third one. No. Oh, I could use FinViz. Never mind. Yeah, there's no spike here in February. Who the borrows are. I'm not touching it. I'm just checking for now. Okay, under a penny. Waiting for the short squeeze into the resistance price. It's always good to play off a squeeze or parabolic. It's still weirdly slow with volume. Hi Henry. Borrows are super cheap for INAB too. Short squeeze coming for INAB. I wouldn't be surprised, especially if there's a divergence in like what the data's reading. Like I don't know what the data provider for TZ is, but it's probably not quote stream media. Like they probably have Polygon, but main thing is there's a 75 million resistance. When I look at my okay, I see there's a 75 million resistance back in September 30th. Okay, that explains it. I don't know where I was getting February. So let me go back to the 6 month. No, go to a year just to be sure. Turn this so you guys can see it. The 5 minute. Go to September 30th. Okay, we see the consolidation where the closing stuff is at 280. It's still a pretty hefty day, even if it did get canceled kind of above this point. I wanted to keep up WINT to talk about how, you know, a lot of these after a day or two, they pretty much just went all the way back down to where the initial run started. Because the initial run on this was 4. Well, it ended at 2. And it was like multi-days of bounce short. But like that's pretty much all I was gonna say on that. But with this INAB, if it does go up to 3, that's where, you know, it may have a little bit of the bag holders left. And 70 million, that's a heavy volume traded day. So like just going up to this point with most of the volume being in the front end on that day that it actually had you know, volume. I'd say it still has it's about two hours, about like 20 maybe 30 million that's usable on a $2-3 stock. That's probably not a lot, but at least it's something that, you know, enough people are going to use for risk management. I like how this one just went from like September all the way to, wait, never mind, I'm trolling. There we go. Actually, I'm gonna put it on an hour. Yeah, we're going with about 30. It was August 30th. So when it comes to resistances, I like to use the half and whole dollars. So yeah, 3 does seem like the best. being abused by a mosquito, I think. Yeah, but I'm gonna let that be great. But that's pretty much the rundown of what I've been doing. Now with this low volume though, not volume, with this increasing volume, increasing like price and slow grind, all those bag holders up to that point, they're going to see this as a chance for them to get out. So yeah, a squeeze kind of sounds inevitable. Came right onto me. All right, I'm gonna go throw this out real quick. Still weirdly slow. Borrows are super cheap. Short squeeze coming. Probably sizing in gradually from 3.4 to 4.
Market is open.
Market's open. The main thing is this thing is up over 100% already. By the time it gets to 3, it's going to be up 200%. And at that point, you're not going to call it a gap up short. You're not going to call it pretty much what pattern are you trading is what I'm trying to say. Well, we do know that this started with about 12, maybe 13 million in the pre-market. So that puts it at 130 million estimate on the day. We're using a 75 million resistance, which means that the estimate is overwhelming the historic resistance. When it comes to how far we're from the top of that resistance, we see the top of it is at 328. With that 328 and our open at 2.54, which just had a slight pullback. We can see after a 20% push, we'd be at 3, which is pretty comfortable. If I did try to short something like this. Now, the really cheap borrows and the 18 million float on a, small cap that's under 30 million, it's something that could work. Now, what I would call it at that day or on this at this time would be it'd be a bounce short. Like, it'd be hard for me to call this a gap up short, but it wouldn't be that hard as long as it stays within like the 200%. And so here's the squeeze. And there's nothing else anyone's touching right now. Like, if you just look at the volume at the rest of the market. Oh, hold on. Realize this. Would I consider this a gap up short? Or? Yeah, no, yeah, because the main thing is it's partially canceled. That's the only thing that's like getting me. And then I wouldn't consider this grind a gap up. It's more of I don't know what to call it, but it just doesn't look safe. Now, the top of this resistance goes to like 3.3. And when we looked at the intraday, I think we saw it went up to 4. Okay, while that's doing that, we put this on the side. Go back to the intraday. Like I'm gonna let all this price action play itself out, and I might touch it like 15 minutes from now. But my thing is 270, 280. Like that's where I think the support and everything is going to be, because that's where the close of that previous day was. Now, while that's doing that, and like it's set to overwhelm the resistance, is the main thing. And if it does overwhelm it, how do I know it's not going to double from there? But what am I doing? 3, 2, 1. Yeah, this went up to 330. And we know 270, 290, like that area is kind of a spot that's been tested several times. And that's where we're at right now. So a lot of people are going to use that as a point for their risk management. Okay, yeah. So we saw like a test right there. And depending on how this test happens, like now, being up 160%, we could see this probably go back to 80%, which will put it around like $2 or 210. Yeah, 210 for people to cover. And part of me wants to go in. It's better than nothing. At least so my rule when it comes to like trading stocks under 3 is I only can put in cash. And I'm just trying not to borrow anything that just feels like I'm doing a panic buy or panic trade. There's no reason to panic with this. We know exactly what it is now. If anything, it's more of a gap plus bounce, because it's not supposed to go up more than 20%. And 20% in this case is $3. It's 3.04. Now, this being a gap plus bounce though, it okay, I might have to get in. Like I really like this weakness. But it's only been 6 minutes. Okay, let me see what the chat's doing. Morning. UCAR potential short if it goes to 2025. Depends where it consolidates. INBA looks like a gap through resistance. We'll see how far it goes. He said gap through. Okay. Okay. Why did I think it was a gap plus bounce? Resistance goes up to 330. It was a 70 million day. Open. Okay, so I did the 20% bounce because it was within like 20% from the top, but it still had like a little more room than that. Yeah, so that's what I thought. But why did he think it was gap through resistance? Okay, which means he's using a closer one that I probably didn't see. No, because all of that would have been canceled. But if he's trying to say gap through resistance, that means it's let's see, if this is at 330, this is probably going to 5, like 520, 510. If that's what he's calling it. And he probably thought it would gap through because most of it was canceled up to 290, which it just did do a partial test at 290. Which kind of gets me to think about the fine difference between the two. With the gap through, it's supposed to be like an early move, and then they get squeezed and trapped, and the heavier it gets, the more volume it trades, the heavier it's going to fall later, which is fine. But if it actually is a gap plus bounce, like I was thinking, this one's just going to go to 2, like 210, and that's going to happen before like 11 o'clock. But if it's a gap through resistance, like he said, this one's not supposed to pull past that'd be the full reward. I think it's they'd use 290. What's half that? Yeah, 2. Yeah. So the main thing is this is supposed to be a fake. It's not a short trap, but it ends up being a short trap. So like this is supposed to be a short trap right now, and then if it squeezes, it's going to go all the way up to. So I want to do it from the high. It's supposed to go to like 520, 530. But since when we look at the intraday, yeah, we'll just do it this way. Yeah, we'd use 3. Yeah, so that puts us at 480. But let me do it in the math anyway. Yeah, but what are we doing? Yeah, so if this is a gap through resistance, we're supposed to aim for 480 before we actually go in. But if it was a gap plus bounce, like I was thinking, we're supposed to aim for, leading up to 3. And if it did break 3, that's like pattern break. But now it's at 290, which we already saw. The previous close was 270, and it's kind of gapping a little bit over that. So it's kind of making me think about which one is it. And I could see how like each one of those came up, but still kind of the development can kind of go like either way. And the clear difference between the two is if it's a gap through resistance right now, this is just phase 1. And with phase 2, depending on how much volume's trapped here, is going to affect the squeeze around like 10 o'clock. And then it's going to determine how long it takes for everything to drop before 1 o'clock. But if it is like the one I was saying, which is gap plus bounce, this is supposed to die at 2, which I'm having trouble trying to remember. I could just pull up my cheat sheet, but No, because it meets the minimum in the pre-market. It meets the minimum, the volume. It meets the float and the market cap for both. When it comes to the price action, it meets it for like the both, like at the open. But before that though is what I'm really trying to get. Cause like, how do I not mistype this again? If it is what I say it is, or if one is just a failed version of the next, which is kind of like throwing me off. Because like, for me to be right, which didn't really matter, this has to go to 210. And then, yeah, like 210 to like 2. But if it fails before that point, like 230 and above, and then traps everyone here, then squeezes up, then it was a gap through resistance. But the thing is, like, that's kind of after the fact. Well, it gives me an opportunity to, short it later and a lot safer, higher odds. But at the same time, I'd still feel salty that, like, why did I call this that? Normal people would just be like, oh, this is a bounce short. Yes, it's a resistance play. But what type of resistance play is it? Like, and that's more important to me than actually trying to trade this for right now. Because it's going to determine how I trade the next few trades. Because like the difference between those two is like one's a 90% winning percentage play and the other one's like 80. Like they're both high odds, but the aggression and scaling for the position size technique is different for me. So right now, like when I waited for this top to happen, like I didn't want it to go to 3. Like 3 was supposed to be the very max of my estimate if I was calling it a gap plus bounce. And it's already kind of pulled past my not all the way, but it's kind of already pulled past what I would expect from the first stage of a gap through. So I don't know if that's actually the case for that, because that's not a shallow pullback. That's a strong pullback. That's at least like 25%. There's 20, which is 230. And like, that's the minimum that we wanted to see for like, to call this weakness. And we just got that. And with that sign of weakness, if this actually did close that gap, that's going to be dangerous because no one's going to trust it again. Because like, that's supposed to be some strong weakness or a signal of weakness. But we have seen it like explode before, and it already has 36 million volume with 130 million volume estimate. And so if we do about 30% of that is about 40 million, and we're about to hit that threshold. And this is the momentum shift point that's supposed to happen, and it's already hitting that, which is kind of too soon, especially because it's only been 15-17 minutes into the market, which kind of gets me thinking back to probably gap through. But at the same time, I know I could have made money on this, but what a kind of shot me in the foot is if I would have been waiting to hold this all the way to 2, probably like 290, or I said 290. If I wanted to hold this to 2, probably like 190 a little bit. That last 20% could have got me if I wasn't thinking how this could be gap through resistance. But anyway, let me look at the other chats, see what they're doing. Oh there's also UCAR. But Yeah, that didn't move. Yeah, but if it did go back up, there is it's like an offering. You can use those pivot points as like a resistance. This one had an IPO announcement around like 25. Everyone expected it to only go to 18 pretty much, which was like 75% of the run of the entire run. And at that point, like if you consider like that a bounce kind of thing, you went to 50, you probably expected it to get to like 24 at max. But it went past that point, especially after the announcement came out and everyone just said, oh yeah, trash, put it down. But yeah, nothing from there. What's I doing? I was doing something. Oh yeah. So the main thing is I want to write if INAB like what early signs could I see because here's the intraday resistance we're using, which is partially canceled up to 290, but there's still, you know, bag holders at that $3 level. And so if we do use that $3 level, it's kind of light. And you already said it, that slow grind, it was kind of suspicious, but I'm not very focused on like the slow grind part of it, because we kind of knew that was going to happen, because that just shows how little trust people have, or what kind of manipulation they're trying to give in the illusion that no one trusts that. Up to 260, because we kind of already expected as much because of the 7 retest up to that point, like up to 250, 260, shoot, almost all the way up to 290. On low volume, it was easily tested like several times. Which is like, my thing is, the only thing is those partial cancels is why I think he's calling it a likely chance that a light resistance is going to gap through. But I know he wouldn't just do that. So I'm really kind of trying to figure it out why. Like not just why, but like what's the early criteria that he was seeing. The only resistance I see on September 70. Oh yeah, already see that. What am I doing? I lost the chat somewhere. Oh, there you are. If it doesn't have a squeeze, I won't touch. See, that's the thing. Like I would have said the same thing if I didn't know what I was looking for. Like, but if it was a gap plus bounce, I'd only be looking for like a very shallow squeeze in the first place. If you're just thinking like, you know, normal bounce short, you want things closer to the like $3. And so that's where you could be like, okay, I want to squeeze to like 310. Or like I'll start sizing it a little bit at 290. But if this is actually a gap through, this is actually what you want to see is a pullback. How do I describe this? I could just show an example, but it feels like cheating. The main thing is you want to pull back in the pre-market that's right below that resistance, just to give the idea that you're going to break it, but it's actually a trap. Where gap through? No. That's the entire thing. I need the intro document. I have a lot of words in this, so I have to find the find button. Gap through. Like I have a general idea of where it is, but gap through resistance. There we go. So should be something that says pull back here. All right. Is this the right version? Yeah. Okay, here's an example. Not what I want. Awesome. What the intraday? All right, so it gaps in phases. You see on this $2 stock, this one had a under $1 kind of move. When this went up to like 230, it had that period where like it did a pullback. During that time, everyone thought up to this point, wow, it's going to about, you know, half the spike, 30% of the spike, things like that. Well, all that volume trapped in that space ended up becoming a part of the squeeze. Like it was a short squeeze, it was a short trap. Now that's just this is just like phase one. This part is phase two, and then that's the three. And then depending on how much volume was trapped here depends on how long it takes for it to drop later. Because this part right here in phase three, it can also have like a consolidation where it has another chance to kind of double top and do some other stuff. But that's you know, neither here nor there kind of thing. The main thing is when you look at this, a normal gap through resistance, like the resistance in this play, we just showed it in the last chart. Here's the intraday. As long as I stop pressing the wrong button, the resistance on this was at 190, which showed you that it gapped through that in the pre-market and then came back. That is the normal sign that you look for a gap through resistance. You want it to gap through it in the pre-market and then pull all the way back to the top of it, and then that's how you know it gapped through. And then the pullback intraday goes back below that point and then goes back up. Like that is my main trigger where I'm just like, now I'm looking for a gap through resistance. But what I saw today was more of a gap plus bounce. So I'm like, what am I missing? Like, so, but there's levels to this stuff too. So there's like type 1, type 2, type 3. So this could be one of the types that I don't normally see which is why I'm kind of excited, because then I can like document it, and then create it into a technique. And when I see borrows like under a penny, I don't feel anxious to borrow those like now versus later, because usually like if this did pop up to like $5 where I really want to trade it, this probably won't even like change that much. And if it does, like it's okay, I still learned. But the main thing is the reward on this, it's still some there, which gives me the feeling that that 20% pull that we saw, it's still heading towards like gap through resistance kind of movements. Now we know the resistance on this is kind of widespread. Its day goes as low as like 230 and all the way up to 330, which means that we're not at the top of that resistance. We're inside of that resistance. And usually when we get inside of a resistance, that's where we get into gap plus bounce. Like we talk about it being like a certain percentage from the top, or if it's a bounce short, it's like you have to gap into that range. Well, this gapped all the way from 1. So we know like it's in the bounce short world. I'm just trying to figure out which one and why. Now I'm not going to pull up like all the patterns and just like put them up here, because I'll get in trouble. Now, not in trouble, but like I'll get like a lot of questions from different levels. But the main thing is when I see this slow grind, like, so this is an important level. So I got pretty quiet because I wanted to see if it just tanked. Because if it did, I'd call it a, yeah, but see, that's the thing. Like I'm doing it after the fact. Main thing is I want to label my risk management based off of like what happened in phase 1 and the start of phase 2. Because like right now, I'm still calling it gap plus bounce. Yeah, but yeah, okay, what do we do? Probably reverse. Probably resistance plus short squeeze play. Probably sizing it gradually from 3.4 to 4. See, that's the thing. Like if you did do that and this was a gap through resistance, that'd be a part of the trap, and then you end up being in that large squeeze, which is why I'm like, did he just like make a mistake, or did I make a mistake? Oh, it grinded too hard, lol. I'm gonna be cautious. Does not have to short squeeze like in a 3. Where did it go? The amount of overthinking is insane. Yeah, I see that. When trying to figure out what pattern it is, do you have an actual data on those patterns or just ideas? No, I have data. I have gap plus bounce short, gap through resistance. Like all those resistance plays, I have them down to a how do you say it? I don't have it down to a science, but I at least have something. So where are you? There it is. So I have most of my stuff hidden, like over on the sides. It's like 40 columns over there hidden. But what I focused on which is kind of weird that I have this dip by here. Let me hide that one too. But the main thing is I was trying to focus on like this gap through, this bounce short types, and gap plus bounce, just because like there are the higher odds. If you look down in like this section right here, this pretty much says like all the high odd patterns. So it goes like low tier, mid tier, high tier. I'm pretty much just focusing on the high tier because I'm in the lower, what do you call that? I'm in like a small account challenge kind of thing. I'm just trying to figure out in a trade selection way, in a risk management way, what's the fastest way for me to grow, and also learn, you know, the like my personal type of it's pretty much like a discipline thing or challenge for me. But the main thing is like when it comes to my bounce shorts, yeah, I mostly just separate that by before like 2 o'clock, before like 1 o'clock. It really depends on the spike in which it happened or when did it happen, like midday, morning day, pre-market, and then comparing that relative to the size or magnitude of the resistance. So if you look down here, I have one in like low tier. I'm just like 20 to 40 million, you're light. 60 million plus, you're heavy. But then like that just separates between like a high odd and a low odd bounce short for me. And it's all within like the range that I'm considering like is a bounce short. Anything outside of that range, you start to get into, you're going to be a gap plus bounce, or you're going to be something like a gap through resistance if you went through a light like resistance and stuff like that. So like now at the bottom of this, that's where you start seeing like my stats, and then it just like keeps going. But the bare idea is up here. Like there's different types, there's ideal versions of the type, and then there's bad versions of the type. And the things that make it like bad, it's like I have these like little notes in here where I'm just like, okay, this one focuses on like large gaps versus another one that's more of like individual resistance based. And yeah, again, it makes sense to me. And there's conditions where like I want to size down versus I want to just kill the trade altogether because it like broke a risk, an important level, or there's evidence like that slow grinding that you saw in the pre-market. That's one of my kill conditions, but it's a very unique, like bag holders are disappearing at an important point and time kind of thing. If it's happening right at the pre-market, that's one of my kill conditions. And there's another one of those, but I want it to be very specific with what type of bounce short do I want that to happen. Because like right now in this case, like this INAB is cheap. It's not only is it cheap, but then it has a heavy resistance. So then I had to think about if it fits into like this category, like a mid-tier high odd short. It's also biotech, which according to my rules, I'm only supposed to trade when there's a max size resistance. And so I'm like, okay, with that, I know what I'd be risking. Now this is all considering that it's a bounce short, but if it's not a bounce short, then I have to switch over to my rules for gap through gap plus bounce, or my rules for like gap through resistance. And that just, you know, introduces more like conditions and stuff. So I'm just like, okay, I have to really nail down which one is it. And I couldn't tell like right off the back, but I do know it's all within at least bounce short criteria. But the main thing is I really thought it was something closer to gap plus bounce. And my normal cue for determining that is what happens in the pre-market. Was there a gap through that happened in the pre-market? Was there a pullback? And if there is a pullback, because there's times where there's not a pullback. if there is a pullback, that increases the odds and things like that. And okay, here we go. If in the pre-market got much higher, then the estimate, yeah. So remember in the pre-market, it was 13 million. The estimate at that point was 130, and then the previous resistance was 70 million. Well, that makes that the higher, or the gap is much higher when it comes to the estimate. But if it pulls back over 20% before the open, not after the open, but before the open, that's a really heavy sign of weakness. Now that increases the odds that it's going to drop, because like that slow grind in action produces liquidity. It enters into the chart, then it pushes it back down, which means that like people are trapped in that like gap. But it's any kind of conflicting signals is another one of my I need to reduce my size kind of conditions. And so that's all under gap through resistance, which like this doesn't seem like gap through resistance to me. It seems like gap plus bounce. So that's where I'm just like, when I saw that, it just made me go like, what the fuck? And yeah, so I was double, triple, quadruple checking like if I was doing something wrong. But I'll just ask him about it later. See now I just got confirmation, like looking at the Freedom Challenge. Someone parroted my words and said it almost got canceled by the slow grind. Is this more of a gap plus bounce? He said yes. That's why I didn't touch it. Because it was almost canceled by that slow grind. Okay, so I was right. But the main thing is there is unique situations like that with that like slow grind that you have to, you know, have a certain point for your risk management and a certain like price action move before you like just kill the whole trade. And that was his. So yeah. Okay, now I don't feel as bad. Because the main thing is like for me to call this a gap plus, for me to call this a gap through resistance, this grind would have had to go all the way up to about like 350 when the resistance only goes up to like 330. And then before the open, pull back to like 3 or 290. And then I'd be like, oh, this is about to pop the top. So, okay, now I don't feel crazy anymore. Cool. Okay, resistance was close to being canceled. Volume is too crowded. Yes, all those are very true. It was crowded, and it was canceled. It was partial cancels, and then it was close to being even more canceled. But yeah, it was a gap plus bounce. All right, so that wasn't overthinking. That was more of what do you call that? Quarter life crisis. Now, the more when trying to figure out what pattern is, do you have any actual data on the? Yeah, I have data. So for each of them, I at least have 20 samples, at least. And if we consider like older data, have more, but I only wanted to use the stuff in the past like 2 years that kind of seemed like relevant. And if we talk about back testing data, I have, even more, but that's where the types come in, like, cause the price action looks weird. Like it's much different in a weaker market than it is in a stronger market, which means there's even more ways to cut it up. And so, trying to keep the basics of like Ducks Trading LLC strategy without like veering like way off into my own thing. It's harder. Let's see. But that's what you're supposed to do. Take the concept and then make it your own, and take the technical parts of it. And I already got the hard part, or at least I think I do. Let's summarize the thinking. Given the weirdly slow price action, I think it's going after a gap through resistance is a safer play. Yes, it's a safer play, but yeah, it's just a safer play. But how do you know you're not going to get trapped in the first end or the first part of it? Because chasers have been winning, and like in the gap through resistance first phase, that's where the chasers lose. Which means that if there's like a accumulation phase, like in the first cycle or the first part of the cycle, when like a supernova happens and then waves of liquidity enter the market, retail's all excited and they're buying everything and they're chasing everything. During that first phase, the ones with the super cheap borrows like this is how they end up going to zero, because no one fears is going to be squeezed. They know everyone's broke and like excited and is easily going to like keep the stock down. But over time, the market's going to train them to keep that degenerate energy, and they're going to slowly start getting squeezed. Like what you're going to see is like from like left to right, like this, there's going to be a shift to where they're going to go in earlier and earlier and earlier and earlier until they're going to start getting squeezed earlier and earlier and earlier. It starts like that, but eventually you're going to see those phases turn into a cycle, and you can pretty much track what each phase of that cycle looks like. And I have I think it's at the bottom of my sheet. Like you can pull up one of those patterns with all the chart patterns, and you can figure out which one is a part of the cycle, and then you can get it down to a science. But there's another part where I have it's like I did it for each pattern. Okay, I'm not gonna just scroll through all this. It's like day 1, day 2. Day 2. Like day 1, day 2, day 3. Oh, there we go. Yeah, so like in these, there's like pattern cycles, like bounce short versions. There's all kinds of ways you could do it. You could split into multi-day, or you could split it into just intraday resistances. And then once you get to that point, what does it look like on the first day? Is it a failed gap up short? Is it a gap fill? Is it the failed version of those two? And like they were all connected. But yeah, you can overthink this as much as you want. Like trading is as simple or as complicated as you want. And I just happen to always fall into the complicated part because that's just how I work. But getting back to simplicity is better for your health. Now, I still haven't finished these comments. A catalyst. SODO. Yeah, you could summarize this down to it has a catalyst. There's development or research. It's a biotech. It's within normal parameters for market cap float category. It's kind of a cheap stock, so you expect a heavier volume. Probably say 30 million in the first 30 minutes is really crowded. Close to 15 million is crowded in the pre-market. You could really like narrow this down. There's always a but. And just use that to trade with it. Like, oh, this resistance goes up to there. Like this is worth this much to me. And just go in. Like this didn't have to be all that complicated. But for like the long run though, I'd still want to know which one for risk management. Because on one, I'd risk like 7 to 10%. On the other, I'd be risking like 15% and probably even use not just cash, but margin. And what do you call it? When you get into those cheaper stocks, it's a lot easier to get like that 10% or 10 cents, 20 cents move and, you know, lose your stuff because, you know, it's so cheap that anybody with money, like decent sized money, could just come in and just be like, okay, 18 million float, 27 million market cap. I'm an individual. What do you call it? I'm an institution. I'm about to use the 30, 20%, 80%, however much they bought before, and I'm about to destroy everyone that just had this before. Nah, not gonna be me. Not again. Okay, but let's summarize the thinking given the word. I feel like this thing keeps scrolling up every time I scroll down. I think going in after a gap through resistance is safer. ACON is probably going to be the new hot chick. So that one's $2 right now and is up 200%. I don't think it's the new thing. Not at $2. Yeah. Okay, going from 70 cents to $2 is pretty impressive. That's a 300% increase. Why is it not showing up? Put it on orange. It's kind of crazy. 7, 14, 21. Yeah, it's 300. So it's a 200% increase. Well, it's 300. Okay. Yeah, but still too cheap. Aclarion. All right, so let's figure out what this Pokemon company is talking about. ACAR. Oh, must be an IPO. Is it a Chinese IPO? Okay. So first thing, the float is way too big, which is kind of weird. Let me double check that. ACON. Okay, I just put in the wrong ticker. Yeah, I just put in the wrong ticker. There we go. I was like 50 cents. This thing is way behind. Okay, about 5 million. 6 million market cap. Okay, also 5 million. 18 million market cap on dilution tracker. They need money. They have IPO warrants at 4. Last update was February. And it expires. This warrant expires real soon. It looks like they already issued all their warrants on this. Well, it says remaining warrants. Wait, did they use it or is it empty? Now I'm kind of I'm gonna assume that this is still fresh. Exercisable date. Yeah, it's in 2 days. Okay, so remember, this could be a short or it could be a buy, but we just know that it's gonna be something. Assuming that it's a short, we had to push it up to 4. Assuming it's a buy, they probably push it past that. Yeah, so yeah, you're right. ACON, it's gonna be the new thing. The sector though, maybe I spelled it wrong on Invest too. ACON. Not even popping up. Okay, there we go. I just spelled it wrong last time. 3.71 and 6.2. Health information services. But publication of 2-year outcome. Okay, that's the second one today that I've seen. They talked about their annual report. Annual reports or their outlook for an investment. So pretty much as a positive outlook. It's in the healthcare sector. A lot of these information services, they've been trying to borrow the AI name for a while, and they've been sharing a little bit of this hype. So yeah, this is a little bit above a micro float. It has a really low market cap. Yeah, it can fly. Cheap price. And the reward on INAB is about done. Yeah, I wouldn't test it past that point. Like I really wanted to get up to like 2, probably like 190, but again, it's really cheap, crowded. I'd only have like a fourth left, letting it ride. But most profits will already be taken. But what am I doing? Yeah, but the volume on this, it could go to ACON. We're whoa, we've been here for a while. Okay. He seems like discretionary style with stats and fundamentals. Yeah. So I saw this the other day. As long as you have the basics, you can go into more fluid style. I want a systematic execution, but not systematic. So there's always pros and cons to both. One involves a lot more emotion, so you know that's the discretionary style. But there is a healthy balance for my financial personality. I'm still trying to find that balance. So I could, just go back to, doing like 20% of my account size, like cash size, start doing very fixed entry every 20%, every like test of a resistance play, and start from the very basics. But I'm already at that point where I have so many habits and a little depth that if I did go back to that stage, all it's going to do is like build some type of resentment. And I know this because I've done it at least 2-3 times. And the main thing is, you should never feel ashamed to like start over again. And this is about like my 5th time just like starting over again. Like I can show you older sheets where I have like hundreds of samples that just like the base data is usable, but everything after that, it just got more complicated. And then next thing you know, my cheat sheet started getting like longer and longer. And I already told you guys about my revision system, Like, remember these used to be gold, red, blue, green. Like each one of those was like another revision, and I just couldn't feel comfortable enough to call it anything past a B. And that was mostly just because like I was spinning my wheels trying to make progress for all kinds of reasons. But the main thing is, like, I kept trying to be perfect when I should have just been trying to get better. And so that's where I'm taking now. I'm just trying to get better. And the first thing I could do is not going all the way back to systemic stuff. It's more of focus on what not to do and then defining myself in that way. So that's what I'm doing now. I'm just reading a lot of trading books, paying attention to Steven again, and going back through my older stuff. And I'm just like, okay, what is not important? Like, what is something that I could play with and not be punished if I did it like every single day for like 10 years or 20 years and stuff like that. Now we know that like $2-3 right now, it's considered cheap. 10 years from now, when we have like whatever happens in the overall market, this may be the expensive thing, because that's what happened like, you know, like a decade ago. Because the penny stocks, they're the bottom of the barrel, and it's going to change, but the psychology behind it is not going to change. And that's where your data is going to come in to like save you. Like we're still in a hotter market when things start to turn down, and then these kind of plays come up, like instead of like the 150 times they show up now, or like 50, 75 times, when they start showing up like 40 times, that's where you're going to really have to narrow everything down to a science. And yeah, I'm just trying to prepare for that. Yeah, but what am I doing? Let's summarize the thinking. Bro, gap through resistance is just a safer approach in this case. Howdy. Miss you, Pedro. I've long FRC. What do you think news will be for bank sector? All right, so with the bank sector, they've been doing pretty well. I thought the next one that was going to go down was that Dutch bank. With the FRC, all the articles I've seen, that they have just been getting better. Especially after 2 weeks ago on Friday, where they all had, like the larger banks had positive earnings. That just gave everyone reassurance in the banking system again. But there was another thing after that. There was another bank that had a 30% increase. And then when it had a 30% increase all across the board, all the other banks had like 5% increase. Yeah, but that is, that's the last I heard of it. And that was like the middle of last week. Well, overall, I've heard that the economy, it's still in the melt up stage. And so we don't know how high that melt up is going to go, but we have like next week where there's going to be a statement for like the upcoming CPI and outlook for the interest rates and stuff like that. And that pretty much starts the next step when it comes to you know, the economy. But the whole banking crisis and systemic stuff, that's out of the door. And it was more research found out that most banks were in the same situation that like FRC and SIVB had, like not systemically, but just like all across the board. Like they technically were all outside of the rules. And so everyone was just really scared for no real reason. And I think I talked about it like a few videos back. After the Congress spoke, they were just saying that like everyone's like this. The only reason they got so big is because the Fed did something with like a 2 weeks or 3 week period. They didn't tell anybody anything. That was reassuring. Like there was too much indecision in the air, and it just made things worse. And it only came after they started talking about the FOMC. And since a lot of people didn't know what like a lot of these groups and terms were, that fear just kept ping ponging everywhere and just made it worse. But if you go abroad, you'll see that was it Germany, England, and it was another country, not Korea. Yeah, but they're all doing their own kind of thing right now. But the main thing is like we're healing together slowly is what they're trying to tell you. Like, so I haven't heard anything decisive is what I'm trying to say. INAB conference call starts in 4 minutes. So that I'm gonna check the time on this. Oh well. Almost put him in timeout. The grind and the volume is way too weird. Probably shouldn't touch INAB. Should INAB a 2.62 risky 2.9 aiming for 2.06? I wouldn't be against that. My thing is I can't tell when you guys answered this. I know it was like over 30 minutes ago though. But the main thing is with this, if it is a gap plus bounce, we saw it gapped. We saw it bounced off most of that resistance that's like left over. That's not canceled. From that 290, it should have a reward all the way to 2. But more likely it was supposed to go to about like 220, 210. Going back up into a like lower high, there wasn't a like, what do you call it, really obvious panic. Like up to 20%, that brought you down to 230. If you go up 15% from that point, that puts you closer to like 270. If it broke pretty much this 270 mark, that's where I just be like, okay, now we're getting towards the it's about to reverse stage. Instead of just waiting until it gets to that point, I rather just risk that, and I'd call it the back end, and I'd let it ride all the way down to, you know, see if it gets to like $2. Now the only downside to that is it's going to take a while, like anything past noon, but actually up to 2. I don't want to start any new trades after 12. But when it comes to my trades, I want to close that started in the morning. That's where it starts getting into 2, because that's where we're starting to see the end of the day where like 230, 240 comes in, and like institutional traders, high frequency traders, like all those people that come in and they're just like, okay, let me start my plays, gapping into the next day. And I'm just like, nah, not about it. Same people are also covering, thinking similar stuff. So I'm just like, not even going to try it with these micro floats and cheap stocks. Now, the only upside to those micro floats and cheap stocks is if you go long, you can get a really big win, like 20%, 40%, 50%. Like if you risk it right. But it takes a really long time for that chart to develop. And I haven't built up my tolerance for my longs, at least with size that I want. Like I'd have to start at like $100 and then build up to 1,000 and then to 2,000 and going up. But then at that point, I only have like 3 day trades, like each week. And I'd rather just focus on bounce short the first 2 days. The last 3 days, it's whatever I think is available. Yeah. So today was a variation of the bounce short. It was a gap plus bounce on INAB. So I thought about trading this one, but there was a little bit of like, this is not a bounce short going in my head, so I didn't do it like right away. But you see like over time how this happened. I'm just like, okay, cool, guys, this is what happened last week. Oh, someone mentioned something about a slow grind. All right, let's check out what this is. Okay, error 1, error 2, error 3. Okay, a little more investigation. Hey, this actually could be something. It's kind of canceled. Okay, a little suspicious. What is this? What is this? What is this? Oh, it's probably that. It's probably that. Wait a second. I heard the guru say it's that. Now I'm conflicted. Now I'm getting mixed signals. Now I'm just not trusting this, not trusting the broker, not trusting the blah, blah, blah. Let's just not risk it today. Like, not only do I value that day trade more than I do trying to prove that I'm right or get that quick buck, it's more of about me trying to get that consistency for like the long run. And like, that's just kind of how that goes. Now with this Acon. Okay, yeah, I'd probably get copyright if I start playing Acon. But with this Acon, it's in the healthcare sector. It's been strong. Like the healthcare sector has been strong for a while, because there's a secular trend. This doesn't have a significant resistance anytime soon. I kind of forgot what I was calling Acon, but it's already up 200%, has a decent amount of volume. I think I remember now. It was something at 4. Oh, warrants. That's what it was. Yeah, it has warrants. And they need cash, which means that they might exercise a short warrant at 4. I think Dave brought it up. No, was it Evan? We're both cool. But oh yeah, I should probably say something in the chat. No wonder I've been talking so much. I'm so used to like talking in the chat. That's okay. Steven got it. You know, I kind of want to grow my hair back out. I miss like twisting my dreads and stuff. Just like, nothing's there. But all right, I think I'm gonna call it a day, and hopefully there's enough information for the beginners to play with in this live stream. How long are you streaming for? Is this like your new time frame? Oh no, I'm just gone. I'm just going. So the thing with the stream and like the time, I wanted to try like gaming more. I wanted to try like streaming less, focusing on my trades more and like all this other stuff. But the main thing is we're trying to grow this channel, and if I tried to stream every single day at like 8:45 and the 9:15, it didn't do much for the algorithm. I thought about doing like morning stream and then night gaming channel, but one of my buddies that knows the algorithm better than me, he said longer videos and there's certain things that like mess up the algorithm. And so instead of like doing stuff that messes it up, I'd rather just do things that I know is going to be okay. So I was thinking just doing Monday and Friday, and I was supposed to show up last Friday, but I ended up getting sick, and so I didn't show up. And I was present in the chat room. Like, I've been trying to be more present in the chat room. So if you're in the Discord, like, say what's up. I'm there. I just don't want to burn myself out like streaming on the channel, because I do love talking to you guys. It's just when I talk or when I type and stuff like that, it's like a buildup for me. I don't know how to be consistent with just chilling, listening to music, searching all over the place and things like that without getting like manic or going on like a run or something for like a really long time. Because like I care about the channel, and like I appreciate everyone like keeping me accountable, like helping out the other beginners and things like that. But that's what do you call it? Like, I'm still trying to figure out a new schedule. That's what I'm trying to say. I might start waking up at 3 again and start working out a lot more, because this all really started when I hurt my back, like lifting. And now I have to get back into a better schedule to where I can find consistency like all throughout. But if I get up at 3 a.m., lift, and then do things before I see you guys, then I can just segue right into doing stream like 1, 2, 3 times a week. But before that, during the time that I was hurt, it was much harder to get up in the mornings. And when I would force myself, I would get sicker, and then it would just get worse. And then my trading, I just put that on the back end. And then it's like, once you lose your morning, it's all messed up from there. And then you go back to bed. And then the only way I would get out of bed is I'd entice myself with food, and then that led to its own bunch of problems. And I'm like, okay, this is bad, real bad. But that's neither here nor there. New streaming schedule you should only expect me on Monday and Friday until further notice. But I will always be in the chat. I'm always in the chat, even though I just realized I'm on invisible today. This is why I never touch that, because again, like, there's no consistency when it comes to like me remembering to turn this back on. Like, literally, I'll do it for like 2 weeks, forget about it. The max I'll last is like 2 months, and then I'll never touch it again. went for some food on this INAB and still grind at the same price. It'd be like that. We're not even in the middle of the day where you normally see that dead spot. Bruh, just looking back at this chart, I just remember like the parts of the stream where I'm just like, man, this is going down so fast. If this really is a gap through resistance, this is a sign of blah blah blah. Oh god, what should I do? Like, I was like, part of me was like, oh, maybe I should buy it right now. But you know, just trying to keep that bias. Oh, but one of the things I have been doing lately is a lot of reading. Like, since I hurt my back, I read 5 books, and I'm in the middle of where's his name? This dude. Like, so I followed a lot more people when it came to trading people. So Mark Minervina, Steve Burns, we probably know the rest of them. Like, they're either in the Freedom Challenge or they're in their own kind of area of the market. So I got like my macro news, my micro news, my penny news, and then my just overall, this may be a good person because they put out decent content related to trading or finance. And yeah, that's where this is going. But one of the things I do like is the feeds that mention books. And so like I put mine as Reminiscence of a Stock Operator, Trading in the Zone, Momo Trader, and then the other 2, like I wanted them to stay within the finance world, but like I have other ones that'd be like self-help type stuff. So to be like David Goggins or Quit. What's his name? He talks like this. What's his name? I know Steven has his books too. He's been at since the 80s. What's his name? Help Guru. Like, I don't know how I don't know his name. Tony Robbins. I didn't even have to like finish it. Yeah, anything but Tony Robbins. Like, that's what I would put here. But I wanted to get more financial books under my belt. I have about 20 at this point, probably a little bit more, but a lot of those, they just weren't good. My next one, because I just finished one last night. I'm trying to start more Market Wizards. One of the guys I'm looking at now, I was looking at pretty much the Spark Notes. Jack something with an S. I think his book was like Market Wizard. Oh, it's that Market. Yeah, but once I start lifting, there's going to be a lot more consistency in the stuff I do. Schwager. Okay. Yeah, but that's the next guy I'm reading. I feel like there's something else. Jesse Livermore. That was another one. Oh. That's all I got. Promise. This time. All right, guys. Peace. Be safe. Don't do anything I wouldn't do, or do it at least. If you do it, have at least decent risk management. Later.